Today's number is 0 because that's the percentage of time that we've seen silver positive over the next coming weeks and months when similar circumstances have happened on the RSI. The results are going to surprise everybody, as you guys know that in 2025, this has been one of our favorite investment asset classes. But maybe more surprising than any of this is the data that we're starting to get for the stock market, whether it's the trend line on the S&P or it's just small cap scenarios going on right now. The structure is changing and it could mean volatility is still on the horizon. And then, of course, there's crypto coming down, touching its most traded zone. Will we see this resurface after the biggest liquidation event in history? Guys, a lot of records being made over the last week, a lot of things happening into this earnings season. And of course, we're going to discuss it all today together. Stocks, commodities, and cryptos. Doesn't matter which one you like. Let's get into them right now. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be taking a look at the latest macro data and of course, key levels. What exactly has been going on recently and why should we be paying attention to certain market sectors? Semiconductors fell and many others did rally, but it's more about the key levels that we find ourselves in on the S&P and the trapped zone that we're now in that will probably tell us about the next big directional move. Just before we get into the data, a quick announcement here. We opened up our tickets for Brisbane's trading event of 2025. It's free. Check it out. Links in the description down below. And if you live in the Gold Coast area, Brisbane area, or anything greater, make sure to get there. I'll be discussing some stuff that is absolutely worth attending. So it's going to be good, and we look forward to meeting you. So let's get into one of our best investment asset kind of classes this year, which has obviously been precious metals and just in general minerals. And you guys know that just recently, silver has been going absolutely ballistic, actually beating even my expectations of how fast it's moving. And that has me a little bit worried. And I'm sure it does to some of you guys as well. Take a look here at the latest data here from Sherwood. We posted this over on our X account, links in the description down below, obviously coming in courtesy of Bloomberg as well. And you can see here that gold call averages have gone absolutely ballistic. Now, this is the type of thing that you often see during euphoria, and it is a bit of a problem because it can suggest that maybe we're starting to come to the end of the first large move for these metals. Maybe now we go into a volatile period, and we started to see signs of that, especially on silver over the last 24 hours. Gold overall, US equities obviously finding huge inflows and people coming out with crazy ideas. $100 silver, I've seen some people claim $1,000 silver in recent days. And of course, gold, people are claiming upwards of $20,000 an ounce. So you guys know whenever we see everybody saying these things, often it means that we're going to get one of those euphoric blow-offs and that we could be in for some volatility. Well, Subu Trade has gone through and had a look at a similar situation, and this comes back to the RSI and found that this is often a trigger point. Now, I will note there was a period back in the 1970s, 80s where RSI went even higher, and of course that created a monster euphoric run, so it is possible. But in terms of the data here from the kind of 85 period onwards, you can see that 3 weeks later, 1 month later, 2 months later, even upwards of 6 months later, in every case, silver was actually down and it was not positive. And this has got me a little bit worried if you're looking at this investment asset. Now, I do think that this time has to do with, of course, the macro side, and we need to consider many other things. But what I would say is the volatility. Remember, when the market is rallying up and it's doing so in big chunks and it starts to get larger and larger and larger in terms of the sizing, when that happens for a little while, I do have a couple of reads I share in my private community. And one of the things that I've seen recently is it has hit one of those. So it's basically telling me that we should either go sideways for a little bit or even see a little bit of a decline, which could be, again, a very good opportunity. As you guys know, I'm still thinking that silver could get to $80 an ounce. Now, with silver RSI greater than 70, you can see here Blue Kurtic has also gone through and ran some stats. And again, it's not that positive when you take a look at the data. And this has more data reads, which I think is very important. You want to have more than just a couple of reads. Ideally, you have at least 10 or 20 in any of these situations, and we're getting into that territory here. So what's the 1 month change? Well, it's more negative than positive. So that really means, again, it's time to be cautious while everybody else is running around, dancing and tap dancing about how great silver is and how great gold is. We've already known that for a long time, obviously being gold bullish since 22 and obviously being gold or silver bullish very heavily since this year. And even before that. So, it's all about picking your times, guys. When everyone's screaming about it, that's usually a time you want to say, let's hold back, and chill a little. Now, why is this becoming more important? Well, it also comes back to what we're seeing in terms of the AI trade. Have a look here at data centers. The latest data here from Bloomberg is that data center creation, that is basically building new ones, has now overtaken, or it's about to overtake, general office builds. So this is telling you, of course, that the infrastructure for AI has been going in at a massively accelerated pace. And when else have we seen this? If you guessed the internet, you would be absolutely correct. Yes, this is actually a classic sign of early stage and the beginning stages of a totally new revolutionary technology. And it's something to watch because it obviously means that CapEx spending's going up, but also people have been going absolutely ballistic in the AI space. So will it turn into a bubble that's going to go even further? Probably. But at the same point, remember, when people stop calling it a bubble, that's when you need to be concerned. AI is the future. It's just the pricing right now. Usually, if you go based on history, the internet, electricity, the train, or any other major invention, generally there's a blow off at one point, and then you can make good money again. Let's have a look here at gold versus silver. If you're taking a look at previous historical runs, Tavi Costa doing, of course, excellent work here and overlaying that, gold's gone really high. Maybe silver could still go even more ballistic. But you've got to remember, look at when this chart was taken. Remember, we've been bringing these charts up for a while. 40, suddenly we're here. We're starting to hit very similar overlay charts. So again, it just shows you that the catch-up story, so recently, of course, we've been talking about platinum, palladium as doing catch-ups, is a really good one. It's the same in semiconductors. NVIDIA might lead, and then others come good. Look at AMD just recently going up like 30-40% in just a few weeks off the back of all that news. So it's always worthwhile rotating, understand that. That's something we do here on the channel. Let's have a look now at the stock market. What are the facts? The facts are pretty decent when you're taking a look at these flash crashes. The average performance of the S&P 500 the week after a 2% one-day decline is almost always positive. And I think that's very important when you're taking a look at it. Now, there's been a couple of negatives, but they're not that bad. So this is a good one here from Gunjan JS over on X. And you can see here that we have these really strong general gains that actually happen. And that usually shows that the market will hit like a technical level. It will then bounce. It will then float in between. And then it makes a decision. Sound familiar? It's literally what's happening so far. And that's, of course, what you generally expect the market to be doing after a flash sell, because that was a flash sell driven by liquidity. I know it's tweet based or whatever everyone says, but it's realistically driven by taking our stop losses. Retail traders were just too long on the leverage. Here's a good chart as well. VIX 200-day minus 20. If we don't see this turn, generally we're not in a more sustained downward trend. So we're more in the garden variety. So for now, even if the markets go down, I guess our expectation of the worst case at this point is probably 5 to 8%. And then hopefully we would see a buy the dip. And of course, that's supported again here by Subaru Trade. When we take a look at similar situations at all-time highs, the first couple of weeks can be like a little bit floaty. Then it usually goes into bullish structure. And you might say, well, this time is different, Tom. Well, again, here from Mark Ungewitter, we can see here that we have, pretty good stats when it comes to these thrusts and the way that markets have so far, really moved through their action so far. Remember, it's the third fastest recovery on record, and it does look very similar to periods such as the 1990s, where we go in for a little bit more volatility on the horizon. And actually, what I think is 2026 is going to be an incredibly volatile year. So if you're following channels like this one, I think you're going to have a lot better opportunities, because what we're not going to see is most likely this type of thing. We're actually going to see a lot of heavy movement each way, which is one of the best things for position-based traders and, of course, traders indeed. Now, let's go over to CTAs. I did mention this in the last one. They are extended to the upside. They've been completely behind this year, which a few people in the comments did mention. But basically, CTA positioning is super overbought. And what this is telling us is that in most cases, they're going to be sellers. In fact, in all cases, they're going to be sellers over the next couple of weeks. This could drive markets down. It could get us to the weekly 20, which we'll look at soon. It's important to think about that. And here's, of course, Bank of America's version as well, if you want to pause the screen on that one. In terms of Bitcoin, we saw the largest liquidation ever in history. That's really visualized here by Glassnode. But you guys know that when you get these types of big liquidity pushouts, you've got to ask yourself, have we seen alt season, and have we seen the end of basically a government-led policy here into the cryptoverse? And I would say probably not, because of course we haven't really seen all of the signs that you would generally get in a halving cycle. Remember, most halving cycles have ended in December's late or January's. We're not quite there yet. So most things have been pointing towards that. And you can also see here, again, if we're taking a look at moving averages, etc., it's not really done enough in this flash sell to really change the trend too much either across the board. In terms of general valuations, everyone knows that it's super expensive based on any metric. Keep that in the back of your mind, although I wouldn't worry about it until it's time to worry about. And that, of course, keeps you on the positive side. Remember, markets are generally optimistic, so you've got to know what to look for. And I designed 7 keys around this. And basically, it's in our advanced course, links in the description down below if you're ever interested in finding out how I do it and how I look for it. But for now, we just don't have enough warning signs on the horizon. Now, no surprises, guys. The banks came out, and guess what? Hey, profits are up. Why? Debt. It's debt creation. We're making lots and lots of debt. And you might say, well, that's bad. Yeah, long term probably, but short term, it's still pretty good. In terms of the rest of this week, you can see here it's mostly all eyes on TSM on Thursday. Interactive Brokers also there. And then, of course, next week we'll be kicking off some big tech. So make sure to watch the show for that. That's going to be probably the thing that catalysts us either down to the weekly 20 or gets us going back up again. Now, in terms of how the market acted, it actually did pretty much what I'd think, which was came back down, tested the trend line, very good, found a buyer. If you look at the futures market in a second, we'll do that. You'll notice it hit the 61.8 fib, which was pretty good. And through the session, it was actually not bad to day trade this if you notice these wicks here on the time frame. So you actually got some nice rejections, made a new high, came up, obviously testing this period. And what this gives us is it kind of says, well, look, this could be the low. It's possible. This is traditionally how one of the ways the market will often do this type of thing. So it'll do like that type of thing. It still is possible, though, that we go like this because we're still on the daily 20, remember. The daily 20 is very important on the real market. And then we actually take a low out. Now, if that happens, then we're going more likely towards the weekly 20, which is going to be sitting at around 6,400. So let's have a look at the overall options for this. Why was the previous close so important? It went underneath the put wall and then instantly rejected to the way up. So again, this is why the importance of these options can come into play. And what's going to happen is if we get underneath 6,600 and we close, I think that's more of a signal that the markets want to go negative gamma and they're going to push towards the next level, which could, of course, bring that 6,400, which would be probably the best normalized pullback, but it doesn't have to occur. This could be all she wrote in terms of the markets. We just don't know that just quite yet. Let's have a look here at Tesla. You guys can see that Tesla is holding the 424.30, which has been something we've talked about a lot on this channel. And Nvidia did sell. Now, that's an important factor. When we see that big tech, especially semiconductors selling, we've got to be paying attention as kind of we're seeing that tariff stuff escalate a little bit here. So we'll keep watching that one. And IBIT, you can see here, 60 seems to be the major support. That's 60 on IBIT for Bitcoin. And in terms of the call side, 65 plus. So kind of, again, stuck within a zone. Gold, on the other hand, starting to get some massive options around a couple of levels, particularly this 380 level, which I see on many strikes right now. Whether it's October, November, 380 seems to be a thing. And I think this could be a topping level also for gold because we're approached pretty much that 4,200 zone, which you guys know I was very big on. Now, what about the bonds market? Well, the bonds market actually spiked up in terms of risk. So risk has accelerated based on the bonds market. Now, what happened with the stock market? It's like this. So again, price action between both of them is going to be important. And therefore, we need to be paying a little bit cautious attention to this. That can be a pre-lead. So basically, it's widening. What that's telling us is that there is the bonds market is perceiving something going on. And it is a sign for caution generally for me. It's not like I'm going to get rid of all the investments and run away and hide under, a box or something, guys, or a rock here in Australia where dingoes might get me. It's not about that. It's just you've got to look here at the markets and just say, okay, one of the things is that the bonds market has been accelerating. The last time it did this was March. Obviously, the markets did decline further over that period. It's worth noting, and of course, it's our first major warning sign we've seen in a long time. What about the VIX? Well, the VIX is doing nothing. It's above 20 barely. If it gets above 25, we can talk about it, but for now, it's just doing that. And what we've actually seen as well is rotation. Now, remember, small caps, this is small caps versus kind of the larger caps in the Russell. They're starting to accelerate in terms of ratio. And what that's telling us is post-Fed cut, which is now everyone's talking about more Fed cuts, it seems like small caps are doing a little bit better. And this is the type of thing that happens, of course, when you're in that market condition that is risk on, but in a way that we don't necessarily want. Remember, people always want broadening. We, after a rate cut, want large caps to beat small caps. And at the moment, small caps are actually doing not quite nicely. So, of course, something to watch. Dollar index, no real changes here. It's just consolidating, still looking towards whether it can get to 99.80 on that one. Gold, still accelerating. Can it reach 4,200 first? I mean, there's no signs that this one's slowing down, but silver did have volatility. Look at this one-day move. From the high to the low was almost 6%. Now, you might say, oh, well, that happens. Look at this. Let's just zoom this out. That's some acceleration. This tells me that we're at a dangerous point here to buy silver. And it's not that an investor is going to be concerned, but a trader or someone that's leveraged or something. You've got to be way more careful here. This is not normal, guys. We've gone from being mostly in a very nice dull market, such as here, to an accelerating dull market. We've just got to be careful on this chart. More to come as we see more structure. I'm still bullish. 4-hour 20 did hold. So if you bought that, well done to you so far, I guess. Stops, of course, have to be under these levels. But I think that we're going to see some big volatility on these metals as too many people are piling in. US oil, no updates, still negative for now. We'll see what happens there, guys. I've heard reports that there's oversupply coming through, which obviously that's in the news now. So we'll see what ends up occurring. But we have also seen semiconductors not put another green day in. So just remember here as well, semiconductors have been weakening a little bit. Nvidia was probably copying it the most, 4.4%, and it has that nasty weekly shooting star on it. So just, I guess look, the trend is still up, but you've got to keep this in mind. If we take out 195 in the future, rocket ships. But at this point, it is, maybe the possibility of a 170 is not unheard of. You come down, hit the weekly 20. That would be a nice kind of level there. Not shorting it, not adding new longs. That's all I'm really doing. What about China? China hit the big support. It's bounced off that. Nothing really to note other than that factor, guys. Still a lot of liquidity coming in on China, obviously central bank driven. And the NASDAQ is stuck in between. So again, we look at these major indices and you say, okay, well, what's happening? I would go with the S&P and look at that daily 20 close above, or of course, further sell off down. And remember, the fibs are becoming very important levels here. When we go over to Bitcoin, you guys can see it fell. It rallied, it fell again, went down to the support, rallied, still stuck within it. I think if you're looking at the macro multi-month side, you've got to be bullish, similar to the markets and the structure that we're seeing, but it doesn't discount the possibility of weaker points here to come down a little bit first. In traditional Bitcoin markets, it's often double bottomed, so it's often kind of come down, swiped, and then gone. So that's, I guess, my leading theory at this stage, but I'm not getting rid of Bitcoin. I think it's fine in my opinion. What about Ethereum? It's something similar. Hit a great level. I don't really want it to go too much under that in the future, but it's just all taking a breather after what was just a ridiculously large liquidation. I mean, it was just so insane when you think about it. Guys, if you enjoyed today's video, then remember to subscribe, smash that like button, hit the alerts, make sure to follow. Check out the Brisbane event if you're in Brisbane, Gold Coast in Australia, or you can get up there, make sure to do it. That's on the 12th of November, I believe. Follow me on X, follow me on LinkedIn as well to get more updates. And as a summary of today, look, the market is clearly showing all sorts of different abundance. There are plenty of opportunities out there. There will be even more in the future, in my belief. The one that I'm most concerned about now, though, is my favorite one, which is the silver. Because I think the silver has gone a little bit too quick, a little bit too fast, and that could mean a little bit of liquidation on the horizon. Guys, trend is up for now. Don't predict it. Just recognize when the risks aren't there and you've got edge or you don't. Bye for now.